Alright guys, welcome back to my channel. If you are seeing my video for the first time, my name is Ambassador Choose 4, and on this my channel I drop updates on how I trade, how I make my analysis, and I tend to put out my very little knowledge of the markets for everyone to learn from my little knowledge. So on today's video I want to talk on I want to teach on basic market structure, because a lot of people have been asking me that they don't understand the concept, has been telling me they don't understand the concept of market structure and should please help them to explain it. And on this video I want to explain the concept of market structure. So please follow me as we go very gradually on this class. Please pay attention. If you have your note, you can grab your note and your pen and put something down. This class is really going to help you so much, especially as a forex beginner. Alright, basic market structure. What is market structure? Here I wrote down, please, this is from my very little knowledge of the market, right? I said market structure just means how price moves. So this is the simplest definition I can give it. I said it is the way price moves. It is the way price moves. So whether price is going up or down or sideways, so market structure is just to show you how price is moving. You understand how price is moving. You know, when we talk of structure, the word structure, let it not get complicated, right? When we talk of structure, for instance, as a human being, there is a structure that made you a human being. There is a structure that shows that you're a human being, right? For instance, if you bring a skeleton of an animal, you can't, even though the animal is not there, but the skeleton shows the structure that this is an animal. The same way, when you see a structure, when you see a skeleton of a human, you'll be able to also identify that yes, this skeleton is a human being. Do you understand? That skeleton shows the structure of whatever it is. So as a being, if they pull out your structure, if they pull out your skeleton, you discover that your flesh cannot stand, your flesh cannot move, because there is no structure on it again, right? I don't know if you understand. So the same thing is applicable to the market. When you hear structure, it simply means what the market looks like at a given time or period. You understand? For instance, if you see a masculine skeleton, you will know that this is a masculine skeleton. If you see a feminine skeleton, you know that this is a feminine skeleton. The same thing is applicable to the market. So when you hear structure, it's not something so complicated. It only shows or explains how the market is at the current price or at the current level. You understand? So whether it's going up, which means bullish, whenever you hear price is bullish, it simply means price is buying or price is going up. When you hear bearish, which means price is down or price is selling. Then whenever you hear sideways, that means price is ranging, it's consolidating, it's not going up, it's not going down, so it's just within a particular range. I don't know if you understand. So understanding market structure simply means understanding the road of the market or following the road of the market. I don't know if you are following very well. So here I have this road down. I said types of market structure. Number one is bullish market structure. When price is going up, remember I said earlier that when you hear bullish, that means it's buying or it's going up. So in bullish market structure, you are going to be seeing something like higher highs and higher lows. So price is going to be creating highs, different highs, and higher lows, right? Which signifies a buying opportunity. When you see prices breaking highs to the upside, it signifies what? A buying opportunity. When you see prices breaking lows, okay, the second one is bearish market structure. This is when price is going down, when price is breaking lows, when we are having lower low, lower high, lower low, lower high. Please don't get complicated with higher highs and higher lows and lower high. Don't get confused, right? I'm going to explain them with a diagram. Then whenever price is in a lower low, in a bearish trend, that means you look for opportunity to do what? To sell. So the third one I have here is ranging / consolidating market structure. This is when price is going sideways. It's not going up, it's not going down. There is no direction, right? That's why we say price is what? Ranging. So for me, at this particular level, price goes between a support and a resistance level. You understand? Price goes between a level to a level, It's not going above, it's not going below, it's just within a level, right? At that time, there is no clear trend. So the best thing to wait is for price to break up either it breaks to the upside or it breaks to the downside, then you know that price now have a direction. But hence price is ranging, it's advisable to leave that pair or stay off the market. So let's look at the diagram. Let me explain it with the diagram. So this is bullish trend when market is breaking highs. So here we have higher high, higher high, higher high. What does higher high means? It means that this particular high here, right, higher high, there is another high below, right, that this one here is higher than. That's why it's called higher high. Then the same thing in this one, this high here is higher than this one. That's why it's called what? Higher high. The same thing with this one. This high here is also what? Higher than this particular one. And if you look at it, it means price is what? Going up, because the last high, the other one is higher than it. The other one is higher than the other one. The other one is higher than. That means the structure is what? Bullish. The structure is what? Up. The structure is what? Buying. I don't know if you are getting it. And then the lows, the same thing. Why is called lower low? Why is called lower low is because the previous low is lower than this low. This low is lower than this one. So that's why it's called lower low. Sorry, higher low, higher low, higher low, right? Why? Because this low here is higher than this particular low. That's why it's higher low. This one is higher than this one. That's why it's what? Higher low. This one is higher than this one. That's why it's called what? Higher low. I don't know if you're understanding. Please pay attention very well. I want to make this thing look so simple so that you understand this thing. Then here, this is the second. We have bearish downtrend. When we hear bearish, that means it's downtrend or price is selling, right? So here we have lower high. Why is it called lower high? Because this high is lower than the previous one. Here we have lower high. Why? Because this high here, let me highlight it. So you can see that this high is lower than this one, and this one is lower than this one, just like that. Then the lower low, it means this low is lower than the other low, this low is lower than the other one is lower than the other one. That's why it's called lower low and lower highs. I don't know if you're understanding this very well now. All right, so in this scenario where market is ranging, it doesn't have a low, it doesn't have a high. It doesn't have higher high and it doesn't have higher low. It's just going within a particular range, from up to down, from down to up. It's just moving from up to down, from down to up, from up to down, from down to up, just like this, right? At this particular time, it's best advisable you stay out of the market. But if the price is going within, if you're a trader that trades support and resistance, and the price is ranging between your support and resistance level, you can be catching buy and sell, right? But for this class, that's not why we are here. So when price is forming higher highs and higher lows, right? Let's bring out our trend line. This is our trend line. If we mark this level and extend it, we'll see that what is this line showing us? This line is pointing to the upside, which means this market is going to the upside. The same thing is applicable here. If we put our trend line here, and mark it, where is the market pointing? Downward. That means price is going what? Down. So when price is going up, what are you looking for? You are looking for opportunities to buy. When price is going down, you are looking out for opportunities to do what? To sell. Then when price is ranging like this now, is either you stay out of the market or you buy low, sell high, buy low, sell high, buy low, sell high, right? Sell high, buy low, sell high, buy low, right? That's if this range is very okay for you to trade, right? But for me, whenever price is ranging, it doesn't work for my strategy because I trade SMC, right? So guys, you need to understand this this is the basics of market structure, right? And let's go to the chart so that you know that this thing is actually there on the chart. So let's move to the chart quickly. The chart, what first of all, let's look at uptrend. So if we look at this chart, you can see that this may not necessarily make any sense to you, but at the same time, price has a structure that is following. Are you getting it? It may not make sense to you, but price at the same time has a structure that is what following. So let's mark this structure. You can see that we have this low, we have this high, we have this low. Remember, higher highs, higher lows, right? So we can see this is the structure of the market. In as much as it may not really make sense, it may not look like anything, but at the same time, we can see that price is pushing to the upside. So if we bring this thing out, we can see that price is what? Higher high, higher low. So at this point now, this is like a range, right? This is like price ranging within here. Let me mark it out. So this is like price ranging within this here, right? This is like price going up, down, up, down. At the same time, even though it's ranging, it was still breaking structures today. It was still pushing to the upside, because if you check the lows, you see that the lows are if you check the lows, you can see that this low, lower high, lower high, lower high, you can see that it's still going to the upside, right? So this is basically how it looks on the chart. You can see it. And remember, I said whenever you see price pushing to the upside, what are you anticipating? Whenever price is in an uptrend, you should be looking out only for opportunities to buy, right? You follow the trend, right? You look out for opportunities to buy. Then let's look at for sales. All right, so this is for downtrend, right? You can see price moving lower high, lower low, 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 lower high, right? Lower low, and all that, right? So you can see that even though it may look somehow on this chart, it still has a structure that is forming. So when you pay attention to these structures, that's when you begin to understand what the chart is doing and what it looks like. So if you are not paying attention to the structures, everything will look so complicated, even the strategy. And you need to understand that no matter the strategy you're trading, your strategy depends on market structure. If you don't understand the concept of market structure, your strategy will not work. Market structure alone on its own can give you a strategy. I'm telling you the honest truth. I have a friend of mine who trades market structure and fib level. He uses market structure and fib level. So once price is in a downtrend, he'll once price breaks structure, he will mark his fib level, wait for price. Let me show you what he does. Here we have downtrend, right? We have downtrend. So price broke structure here to the downside. What do I mean by breaking structure? Price took out the previous low. This is lower low, right? This is lower low, lower low. So price took out the lower low. So what the guy does, immediately price takes this out, he'll bring his Fibonacci level. The higher low that caused that break, he will mark it, which is this low here. So this low caused this break, right? So the next low that should form cannot come and take out this low. So what the guy does is he will use his Fibonacci level, put it on that low, then target this high that broke the previous, this low now that broke the previous low, he will target here, then use his fib level and measure from here all the way here. Once he measures that, right, he will now mark out the fib golden zone, which is between 61 and 70. He will mark this zone. He will mark it. Once he marks it, he will set his pending order there. Put stop loss above that low, knowing fully well that price cannot come there. Then put TP, the order high. This is how he trades. And I tell you, 70% of the time his trades hits TP. But the only thing I'm not comfortable of is that sometimes it gives you 1:1, sometimes it gives you 1:2, sometimes it gives you 1:1.5, and which for me is not okay for me, right? But for him, it's working for him and he's profitable with it. You understand? So once you understand market structure alone can be giving you trades with your fib level. It can be giving you win-win trades. So then let's look at for ranging market. All right, here is a ranging market. And whenever price is ranging like this, it's advisable to stay out. You can see the way the candles are even looking, right? It looks so noisy, right? So you can see that price is just going within this particular region. It's not going more than it. It's just moving within this range, and it's advisable to stay out of the market when price is ranging like this. You understand? So these are the basic concept of market structure. Price moves in three directions. It's either it's trending up, which is certain opportunities for you to buy, trending down, certain opportunities for you to sell, or ranging, trying to hunt you when it's ranging. So understand these three basic concepts. You can watch this video again and again so that you can understand this very, very well. Alright guys, I hope this really adds to your knowledge of forex, and I believe you just started the journey, and this journey is going to be prosperous. So please turn on the notification bell on my YouTube channel, subscribe, do well to subscribe. Make sure you subscribe so that each time I drop this kind of educative content, you get notified and you get educated on the forex market. So stay blessed.